People who invest in the EV market need to know that although NIO stock promises good growth, this is not the time to invest in NIO stocks, as there is a higher risk of losing money. In today's video, we will look at NIO stocks will not make you a millionaire. NIO stock ultimate plan revealed. Not just NIO stock, but all other EV stocks are facing market brutalities, but NIO seems to be having the worst of it all. The COVID-19 lockdowns and sanctions are making NIO face a lot of supply chain problems. However, NIO is a company in the global EV space that is promising investors the excellent potential for growth. Still, the situation is too dire for investors to start throwing in money. NIO stock went from $33 to $15 at the end of September. That is more than half, which is not good news for NIO and its investors. From 11th of January 2022, NIO stock has been down 86%, which is very low.
The bottom line is that NIO is down 86% so far since January 11th of 2021.
The other thing aside from COVID-19 sanctions is supply chain delays and price hikes of EV batteries. Due to these things, the pieces have gone up for China-based EV manufacturers like NIO. The Chinese EV market is described as a throat goat and lucrative at the same time by Wall Street analysts, as the market is suitable for manufacturing companies but bad for investors as prices are high. So, while manufacturers are gaining, consumers and investors still need it. Because of the high cost of EV batteries in the Chinese market, NIO is set to buy batteries from an Australian lithium producer, Greenwing Resources. For the lithium, NIO is offering to pay $12 million, which grants NIO 12.16%.
The good news for NIO as Greenwing will now have NIO as a shareholder for 12.16%. To be eligible for nomination to the board of directors.
The agreement between NIO and Greenwing Resources is very assuring, but the more green light is needed for NIO investors to start rushing in. COVID-19 sanctions and proof hikes are not the only challenges NIO faces. NIO also has to deal with rival companies. We will discuss this later.
I will send a wire transfer immediately.
The probability for NIO stock to sink further is very high because of the chaos in the Chinese EV market. The sanctions will not be lessened any moment from now, which means investors should hold off until the market quietens. If you still need to subscribe to our channel, remember to do so, as our contents are strictly for subscribers only. Also, nothing in this video should be taken for professional financial advice. Before you decide to invest, please endeavor to do your research to avoid any losses. Not only are sales in China slow, but in September, NIO made a year-on-year sales growth of 25.7%, which is lower than the 32.1% made in August. In August, sales growth was high because of government inducements. Because of this, the Secretary General of the China Passenger Car Association, CPCA, Kui Dongshu, believes that NIO's recovery is lower than he expected. The COVID-19 lockdown sanctions and the high prices do not take all the credit for the slow growth in NIO, but the rising competition from other EV manufacturers and companies is also to blame. Companies in Europe and China are also competing against NIO with higher odds. For instance, NIO competes with Mercedes EQS and BMW's i4 vehicles in the European EV market.
That was quick.
NIO is up against both incoming and already existing companies. Although NIO had a growth August, it is still deemed an undervalued stock. Let's go into this later. Although NIO's market cap is approximately $19 billion, analysts estimate that NIO will lose about $1.1 billion in 2022, which indicates that NIO stock is not a good stock to invest in now. Investors should know that investing is out of the picture due to the unfavorable EV market environment, because money may be lost if care is not taken. In the past, NIO has been deemed a visionary tech stock and showed a promising trend in its growth. But currently, Wall Street analysts consider NIO stock undervalued at a loss of 250%. Although NIO is at its low, it is still believed to be doing better than it did 2 years ago because it was not expected of NIO to make any profit until 2024. Analysts are still very skeptical about NIO stock as no signs of improvement are coming from the Chinese EV market or NIO, as competing companies are still coming hard for NIO.
That is a lot of money.
They are constantly bringing products that will excite consumers. Investors need to know that there is no control over the market, which means there may be regrets if they invest. Meanwhile, Elon Musk says, it's okay to have your eggs in one basket as long as you control what happens to that basket. With all this said, we recommend you watch our video on NIO stock down 85%. Time to buy the dips? To know more about why this is not a good time to purchase or invest in NIO. See you in our next video.